I'm Debbie Bell-Hosking here at EBAday 2022 in Vienna, and I'm talking to Renata Vilanova Lobo of JP Morgan. We're talking about digital transformation and reshaping payments. Hello, Renata.
Hi, Debbie. Thank you so much for the opportunity. I'm delighted to be here.
Oh, it's great to have you here and in person, which is fantastic.
Indeed.
When we're talking about reshaping payments, have you noticed a shift from digital as a cost-saving measure to more of a culture?
Yeah, that's a great question. So going digital has been a top priority in the agenda of most of the financial institutions for many, many years. I have to say, even prior to the pandemic. And the main reasons being expectations around cost reduction and gain of efficiency. As the pandemic comes, I think going digital became a matter of survival for those institutions, as that was the only way to continue supporting customers. On the other hand, from a customer's perspective, the digital adoption was not an option anymore. It was the only option, right? So that also required a lot of flexibility from customers to adapt to the new reality and change behaviors. Fast forward today, when we look at those customers, that behavior has changed for good, so there's no way back. And not only we have customers with a different behavior, but also different expectations, especially around client experience and cost, right? So in that sense, I think going digital today means not only going after cost reduction and gain of efficiency, but mainly addressing new needs coming from customers with higher expectations. And from a payment standpoint, I think that means delivering faster and cheaper payments with more visibility, security, and a seamless experience. So in that sense, when we look across technology, I think technology is really enabling, or reshaping payments with many different drivers. So a couple of examples. If we think of the e-commerce and marketplaces, right? So nowadays, very often customers are not only the big merchants anymore, but the sub-merchants and small business that are part of that marketplace. And they come with the different needs, right? So therefore, financial institutions need to solve for the needs of the big merchants, but also the smaller ones that are as important as the big ones. Another example is the usage of real-time data in the payment processing. So today you can pre-validate a payment instruction in a sense that you can prevent a rejection from happening. You can eliminate the need of a repair. And at some point we can really eliminate the need of a reconciliation because payment will be reconciled as it happens. Another good example is devices connected to IoT. That's really redefining business models in which payments are in the center of it. And it's crucial as long as it can be provided in a very seamless way. And the last example could be across cross-border payments, right? So the combination of blockchain technology with digital currencies will very soon allow us to do cross-border payments in real time, which will be massive in terms of the benefits, bringing across the payments industry. So I think those are like good examples of how technology is really reshaping the payments industry with lots of benefits across all different industries.
Those are great examples and really compelling because we can relate to them in our ever-changing daily experience. And I found it interesting when you said there's no way back.
It's true.
We've kind of moved so forward and so quickly as well. So what about traditional banks? How can they provide this digital content and this client experience that the new generations are going to expect?
That's a great question. So I think the combination of cloud-based systems with API means that today pretty much everything can be offered as a service, right? Including banking and payments. I think I see two different trends, around traditional banks. So one is traditional banks complementing their offering with very specific capabilities being provided by fintechs or third-party vendors in a way that they can create a very unique, tailor-made solution to specific clients. And this is what customers want, right? A very unique experience. So when it comes to competing with the fintechs and with digital banks, going after the new generation, I think traditional banks will be very competitive by complementing their core offering at scale with very specific capabilities. And I think that will allow them to compete and attract not only the new generation, but also very specific client segments that they could not attract before with their traditional core offering. So I think this is a good example of how traditional banks will be competing, in this new space, and what we can expect more and more from traditional banks. On the other hand, I think we will see the opposite as well, right? So traditional banks providing payments as a service embedded into non-financial models, right? So in a sense that payments again are in the center as long as it can be provided seamless, but without facing the customer. A good example of that is the JV that JP Morgan has with Volkswagen Payments, in which JP Morgan will be providing the payment service underneath the car driving experience with multiple commerce possibilities, right? So it's not only about paying for gas or parking, tolls, but also buying your coffee or doing your groceries, getting your nails done. So endless, possibilities in terms of buying something without even, perceiving that that you're making a payment. So your car becomes your wallet, and with a seamless payment experience. So I think those two trends will be very common across traditional banks, allowing them to be very competitive against fintechs and digital banks.
And I think competitive and creative.
Indeed, yes.
Yeah.
So new models will come as a result of the embedded banking trend, and with very, very creative solutions.
Now, what about cross-impact to other areas? We're seeing payments innovation through all this digitalization and technology. Do you see this moving into other areas, for example, maybe liquidity and credit management?
Yeah, so we've been talking a lot about how technology is reshaping payments and all the benefits that will come as a result of it. But I do think that there will be a direct impact on the way liquidity and working capital is managed. So as payments become more efficient, faster and with more visibility, I think treasurers will be able to focus more on the strategic planning for liquidity and not as much on the operational side of it. I think today treasurers are very focused on making sure that the working capital is available for the day-to-day activities of their companies, and not really thinking about the strategy behind the liquidity and how to get the value out of it. So a good example is how companies usually use their credit facility, not because the company needs credit, but because they don't know when the payment will arrive or they don't have visibility on it. So it's really a matter of compensating for the inefficiencies we have around payments. So in that sense, once we have faster payments with more transparency, I think treasurers will be able to focus a lot more on the strategy behind the liquidity, getting more value out of it than the operational side of it. So I think this is a direct impact that we can expect soon as we see this transformation around payments.
So another space to watch.
For sure. It's a very interesting time to be in the payments industry, I would say.
Absolutely. Thank you so much for your insight. It's been really interesting.
My pleasure. Thank you so much.